Hey everyone, and welcome to the PivotBoss Closing Report for February 29th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the current session here. Taking a look at the ES in a daily time frame here. We saw early strength this morning and we pushed into our upside daily targets, reaching as high as those 55s up there, which was the top of 5-day value there. But once price got above those highs here and above 1950 half, again, we saw another rejection of price levels above 1950 half. This is what we've been talking about here for a while now, is how does price respond above 50 half? As you know, we've seen rejections here every single time we've gotten above this level over the last couple of months, and it continues to be the case. If price cannot maintain acceptance above that zone, the implication, again, would be at least a push back toward 1871s here, with a shot to see a push all the way back into the HVN below at 1811. So we could be looking at another roundabout trip all the way back down if price cannot reestablish itself above 1950 half. Overall, 1921s continue to be bid short term, and any test of that zone will want to continue to be bid for a shot at squeezing higher. Otherwise, taking 1921s offered, again, as we saw before, taking it offered here suggested a push down, and that would be the precursor here to likely seeing a move back at least into 71s, but likely all the way into 1811s. So this rejection above 1950 is going to be very, very important, and especially above 1939, even being the midpoint of the current key range. So a lot of rejection being seen over the last couple of sessions above 39 half, 50 half, etc., and that could mean more of a pullback ahead. So we'll keep an eye on these key levels as we move into the upcoming session. Looking at the intraday time frame, you can see here what we were looking for this morning was for a push higher off of value here. We talked about how that strength early on implied a continuation into the top of value, which ended up rotating down into about 1955 at the time. So price reached a type of value in the zone. In our trading room, we were talking about any rejections in that area would likely indicate a continuation back toward 1927 for a retest, and that's kind of what we saw by the end of the day, especially after price gave up our 1950 half. So that was a solid reversal all the way back to value after price first rallied to the top of value and failed to hold above 1950 half. That paved the way for a big time rotation downward. So now that price is back at value here, any failure to hold above 1927s opens up some potential stops runs back towards support. You can see here over the recent period of time here, we've seen prices go bid off this zone. So bulls are clearly defending this area even into 1921, which is our HVN, our key level, and that is also an LVN on the 5-day profile. So right now, again, if price drops into 1921, that could be an area to test for a short-term buy opportunity for a rotation higher. Any failure to hold above 21s opens up a move back across the range toward 1890. All right, let's take a look at crude oil. Here's crude oil in the daily time frame. This one continues to chop around composite VPOC, and that's 32.92. You can see a beautiful balanced profile has developed and continues to develop after prices traded predominantly within this range over the last 2 months. Now that we're seeing a new month coming online, we could be looking at expansion ahead. So after that initial move we saw in January here, we've seen a good 6-8 weeks or so of sideways movement. And now that this thing is coiling up here, we could be toward an apex of this range that really leads to some significant expansion ahead. And so we're going to be watching this very, very closely. Right now, 34.63 continues to be offered. That's the previous week's high. It's also the midpoint of the key range here. And a retest of that level right there could put some pressure because you have some buy stops above that zone now. Buy stops above here, buy stops above here. And any push and hold above 63s could open up a big time push into the next key level above, which is going to be 37.57 with a shot to rotate into 50 half. Now that's a far stretch right now, but it's not outside the bounds here to really get some major expansion even beyond those levels. Once we see a breakout from this range. At the moment, we're chopping around VPOC. And as I mentioned before, there's no real edge chopping around VPOC. The market wants to trade around this acceptance, but soon we will likely see major expansion. So we'll be on the lookout to see when that occurs. Looking at the intraday time frame, what you see right here is mainly price trending quietly higher throughout the session. VWAP was bid throughout the day, and so far continues to remain bid. Overall, what we want to see is how does price respond above 33.65s. That's been an area that's been rejected lately. Any acceptance above that zone could lead to further strength to the upside. But right now, again, we got to watch the edges of the range. And anything above 34.63s opens up a continuation much higher. Failure to get above that zone can put pressure back to the downside. So right now we're kind of chopping around that midpoint. No real edge right now, but we'll keep an eye on it as we head into the next session. Taking a look at gold. Here's gold, very similar to some of the other markets here. We got a nice clear trading range that has developed. A key range from 1263.90 down to 1191.5, the midpoint at 1227.70, and we're chopping around this zone. This is a neutral key range here where price is trading mostly within the inner 50% of this range. I mentioned before that we could be looking to kind of fill in some of the holes in this profile in order to create more of an balanced profile before we do see expansion. So we could continue to see more chop back and forth to fill out this profile ahead of expansion, but we have the key levels here to watch for expansion. Once we do see a breakout from this range, it will be significant. So again, we'll keep an eye on that one. Taking a look at the NQ, this one, very important the way it kind of slid off the previous month's close price. We saw how that was being resistance early in the day, and this is the last day where that price is kind of playing off that level because we're going to get new key levels for the upcoming month once March comes around, which is tomorrow. So looking ahead here, the fact that price was rejected above the previous month's close and then it came back and kissed it again and went offered. Again, that's showing more rejection above 42.26s. Every time we get above that zone, we've been seeing rejections. Now we got it above it again, more rejections. So again, if price can't establish itself above 42.26 short term, a retest of that level in overnight trading or perhaps during RTH could offer a selling opportunity for a continuation back toward 40.85 and 40.96. So we'll keep an eye on this one as well. Above 42.63 opens up a move back toward 43.09 with a shot at seeing the primary upside weekly target of 43.51. Looking at the intraday time frame, this one continued higher throughout most of the day and again failed to hold above some key levels, and then from there returned all the way back down toward recent support 41.96, which is a key level for us. That's actually the Fed level, and you can see how price has continued to trade around that Fed level. First going rejected away from it, chopping around it, rallied up to it, come back to it, up, back. So it's been a prominent level in the charts. Continue to watch 41.96.75. Bulls want to keep this zone defended for a rotation back toward 42.60. Failure to hold 41.90 opens up a move across the range into 41.30 and 40.91. All right, that's it for now. Let's see how this thing plays out heading into the upcoming session. Good luck and trade well.